point. In the developed markets, the issue seems to be demand. Are people going to be willing to take the vaccine? Surveys show slightly more mixed reception, generally positive, most people willing to take it. But in emerging markets, you tend to find higher fractions of the population saying they would like to take a vaccine. But as you noted, they're farther back in the queue in some cases in terms of actually getting that supply. So we find that most of the larger emerging markets probably wouldn't be vaccinated till later in 2021. And when I say vaccinated, I mean having half the population vaccinated probably sometime late in 2021.
So even though we might see a continued gulf between the haves and the have-nots with regards to the vaccinations between DMs and emerging markets, then, Andrew, is there a case that as some of those developed markets with the vaccine start to move to more economic normalcy, that it might mean, therefore, that stimulus could be taken away, so therefore we could see the market still perform quite well in the emerging markets as those monetary policy settings will be still very, very loose?
We agree. We think 2021 will certainly feature still very supportive policies across both developed and emerging markets. Fiscal policy, fiscal deficits will start to come in as the economy improves, and you won't see quite as robust a fiscal support as the year progresses. But as you suggested, in emerging markets, you're still going to have quite easy policies overall. We don't expect to see monetary tightening in a significant way. And in fact, in a few economies, we may even see a bit more easing. I think it's probably 2022 or beyond when we would really see meaningful tightening in policies. So in that sense, 2021 should be a good year of growth recovery, but still very easy policy settings.
What do you think is going to happen on the inflation front? And again, could it be a dichotomized, DMs versus EMs situation with regards to inflation?
The big challenge lately has been food price inflation, where in a number of countries, food prices have been quite high, notably India, where overall inflation is still over 7%. And we see this in a few other emerging markets as well. Some of this probably reflects supply side bottlenecks, distribution problems because of COVID-related restrictions and other factors. We think underlying inflation pressures should stay pretty low. After all, these economies, while improving, are still not yet at normal levels of activity. So I think while there'll be some concerns around food prices, around inflation here and there in pieces of the economy, and later in the year in commodity prices, particularly oil, we don't think inflation is really going to be a constraint on what policymakers do. They're going to be able to keep policy pretty loose. Again, on commodities, we do think we could see significant increases in prices. Our commodities team forecasts Brent oil at 65 a barrel around the end of next year, so that's clearly a big move up from where we are today.